Guys, let's take a little bit deeper dive on the recent CNBC Jim Cramer story and his misleading, well, not necessarily misleading, but what would become a mistake for people who invested heavily into Silicon Valley Bank. Jim Cramer is a well-known television personality and financial commenter who offers investment advice and stock recommendations on his show, Mad Money. While Cramer is a popular figure in the world of finance, it's important to remember that no individual should be solely relied upon for investment advice. Regarding Silicon Valley Bank stock, it's essential to conduct thorough research and analysis before making any investment decisions. Even if a financial expert recommends a stock, it's crucial to evaluate the company's financial health, growth prospects, and industry trends to determine whether the investment aligns with your investment goals and risk tolerance. It's important to note that every investment carries risks, and past performance is not necessarily indicative of future results. Therefore, it's critical to consider a range of factors when making investment decisions and not rely solely on the recommendation of a single expert or source. Let's get into the article a little bit. So, CNBC analyst Jim Cramer is once again being pilloried on the social media after a clip resurfaced showing the Mad Money host recommending viewers buy shares of Silicon Valley's parent company, Silicon Valley Bank's parent company, which owns the tech-driven commercial lender that swiftly collapsed on Friday. That's today. The ninth best performer to date has been SVB Financial, the bank's parent company. Don't yawn, Cramer told viewers during a February 8th episode of Mad Money. Cramer listed SVB Financial among his biggest winners of 2023 so far, alongside blue chip stocks such as Meta, Tesla, Warner Brothers, Discovery, and Norwegian Cruise Line. This company is a merchant bank with a deposit base that Wall Street has mistakenly been concerned by, Cramer said in the clip. Cramer touted the fact that the bank was less dependent upon private equity and venture capital offerings. He said that the stock was the fourth worst performer of 2022, though it was worth buying because being a banker to these immense pools of capital has always been a very good business. The stock is still cheap, Cramer said at the time. SVB Financial was trading at $320.40 a share. The Post has also sought comment from CNBC. On social media, critics of Cramer made sure to remind others of the now ill-fated stock dip. 1 month ago, Jim Cramer urged investors to buy Silicon Valley Bank stock, one Twitter user observed, adding, "Today, the bank was closed by California regulators, making it the second largest banking failure in U.S. history." Another Twitter user wrote, At first it was funny that Jim Cramer was always wrong. Now it's extremely sad how many people and families he's destroyed by always being wrong." This is going out on a limb to say, not saying that Jim Cramer's in this pool, but if somebody's telling you to buy a stock, well, maybe somebody's shorting a stock and making money off it. Although we can't say that about Jim Cramer because we don't know. That, you always have to wonder who benefits, who profits. The guy needs to be taken off the air for good, says somebody else. Says Genevieve Roque-Decter, whoever that is. Jim Cramer said a month ago Silicon Valley Bank was a buy. He also said Bear Stearns, the investment firm that collapsed in the subprime mortgage crisis, was fine in 2008. This man deserves an Oscar. Cramer is a frequent target of scorn and ridicule on social media, where observers point out some of his market predictions that failed to materialize. Investment gurus seeking to capitalize on Cramer's poor forecasting track model introduced a pair of exchange-traded funds, which are predicated on a strategy that contradicts whatever the CNBC personality recommends. If he specifically says either buy a stock, then we're going to go and short that stock at the next practical moment. Matthew Tuttle, the CEO of Tuttle Capital Management, which launched the Inverse Cramer Tracker ETF, told Bloomberg News. Last fall, Cramer appeared on CNBC's airwaves and offered an emotional apology to viewers for touting the Meta stock, the value of which plummeted by some 25% during a single trading session. Interesting. I don't know if we can get into any comments here. Looks like not. I'll see you guys in the next round. See that? Do anything?